Today's guest is a supporting sponsor of Liberty in Finance. Welcome back to Liberty in Finance. We're delighted to have this returning guest. Kyle Floyd is the CEO of VOX Royalty. He joins us again this Tuesday morning, January 18th, 2022. Kyle, thanks for coming back on for Liberty in Finance.
Donegan, my pleasure. Thanks for having me back on.
We especially appreciate when we get an opportunity to break news to the world about topics that are of vital interest to people who are watching real metals, real money. And VOX Royalty is definitely helping to expose new opportunities for investors in that area. You've got a press release that just broke this morning on prior to the Wall Street Open. If you could let us know what the big news is that people need to be aware of for VOX's new business relationships that you've struck.
Yeah, this is a tremendously exciting announcement for our company and for our shareholders. This is essentially a royalty over, I think, one of the largest acquisitions of gold equivalent ounces in the sector over the last decade. It's 50 million gold equivalent resource ounces, mainly comprised of PGM metals, platinum, palladium, rhodium, held by a tier one operator in Sibanye-Stillwater. This is a project that was in production as late as 2009. It went on care and maintenance as platinum prices at that point fell from 2,000 to 200. And this was really a forgotten royalty. And as you and I have spoken about before, we are systematic in terms of our capability to find undervalued royalties all around the world. Our proprietary database underpins a lot of those efforts. And then our technical team is doing the hard work to really understand these assets, understand the risks, understand the upside. And so with this news today, we've really, I think, separated ourselves from most in the sector in terms of being able to find value with tangible catalysts that we expect to provide value to our shareholders for generations.
When we interviewed Rick Rule together with Keith Neumeyer of First Majestic Silver in the last year, they talked about a massive metal shortage coming. And it echoed some of the principles that you just described, where you talked about resources that had been neglected or exploration and development that had been put on hold due to depressed prices in the metals arena, that sort of thing. So now we find ourselves with this burgeoning green economy. And it's interesting because when we talk about platinum group metals, one of our partner channels has talked about people thinking that, well, platinum is only used in internal combustion engine catalytic converters. And so therefore, if you're going to a green economy, it's not going to be as much demand. However, it's also a little known fact that fuel cells are going to be high demand for platinum group metals, and the batteries to run electric vehicles and so on, taking some of those metals as well. So can you talk to us about your outlook, VOX's outlook on the metals supply demand dynamics going forward, and why you feel it's a sweet spot, a time for people to be looking at the sector from a value standpoint?
Absolutely. Well, from the time that this project went on care and maintenance in 2008, 2009, the average price of that basket of metals that comprises the value of this specific geological matrix has gone up 7x. And so Sibanye-Stillwater has indicated this is in their 2 to 5 year horizon to bring back online. So it's really one of those opportunities for us to find deep value with an asset that's going to be very catalyst rich. And again, you talk about an ore body of this size, open at depth, with an operator that knows how to exploit these types of operations of this significance. Many would say it's a once in a lifetime opportunity to acquire a royalty like this. VOX, I believe we've created the systematic ability to continue to do this. And in relation to the PGM dynamics, look, PGMs probably have one of the tightest, I would say, supplies out there of what I would call in the overall precious metals bucket of commodities. It's controlled by relatively few operators in relatively few jurisdictions. We have now really got a stranglehold on that market for any royalty company sub $1 billion. When you overlay those 50 million gold equivalent ounce resources, it's easy to talk about in gold equivalency terms, along with our royalty on the Pedra Branca project in Brazil operated by Valor. There's not another royalty company in our snack bracket that comes close to that kind of exposure. And when you start talking about our exposure in totality, we're now getting into the neighborhood where we're going to be approaching 100 million gold equivalent ounces of resource under our royalties. And so that's tremendously significant in terms of the long-term value generation capability of this business for our shareholders. And then fundamentally, the value at which we're acquiring royalties is almost unprecedented in the sector. And as you and I talked about previously, it's a competitive sector, but we have really worked hard and invested in creating these systematic advantages that allow our shareholders to generate this type of exposure.
You're making me think about two questions, so I'll pop them both out there, but then let's just hit them one at a time. One is, again, reminding maybe new viewers what the difference is between a royalty company, such as VOX, versus a mining and operations company that's actually digging the metals out of the mine, out of the ground, number one. And then number two, how that provides distinct financial advantages in a time of rising inflation and rising costs. So let's take those one at a time. First of all, remind people what makes royalty companies different from mining companies.
So royalty company, actually very easy to understand, very basic. To be a royalty company that performs and finds alpha and the right type of exposures with limited risk for your shareholders, it's a very tough business. It's one I think that we're doing very, very well. But what we do is we exclusively focus on buying third-party royalties. So these are royalties in the hands of disparate third parties all around the world that have a revenue-generating interest in these underlying mining projects. These are typically top-line revenue, usually between 1% and 3% of the revenue that's generated from these mines. So we don't run the mine. We're not in charge of operating the mine. We simply go to almost an unaffiliated party that garnered this royalty somehow over history, and we buy those interests and we buy those and combine those into a portfolio right now that stands at over 50 of these royalties and streams. And we're never on the hook for more capital to the operator of these assets. So all the future investment, that's borne by the mining company. We just take a percentage of that revenue. Gets into your second question. How do royalty companies insulate investors from some of the risks of mining companies? One of the big risks that you and I have been speaking about now for a while, I think we were probably one of the first two guys out there speaking about inflation likely exceeding all expectations, certainly of the Fed and most others, and what kind of impact that was going to have on the mining industry. It's impacting kind of every facet of life right now, but how does that specifically impact the mining industry? And it's actually got very negative consequences for the mining industry as well, because the metals have somewhat stagnated a little bit. You and I probably both agree at a personal level that metals will break out. But for a mining company, stagnating top line, but they're feeling the price pressure, the input cost pressure of inflation. So the consumables, the infrastructure, the steel, the diesel, the people, all of that is increasing in price, which is condensing their margins. The royalty company, as I explained kind of what the differentiators were, we're just attached to the top line revenue. We're not affected in most royalty structures that we own by the cost structure of the mining company. So when inflation goes up and their price, their margins get squeezed, we're not affected by that because we're taking a top line interest. Further to the benefit of royalty companies, when mining companies go and invest and we don't participate in that capital, we're not diluted. So it's undiluted interest that typically runs for the life of these projects. And we obviously don't have the capital calls and the risks that go along with operating a mine and some of the challenges that occur for operators to address. So all in, it's a risk asymmetry typically in the benefit of the royalty holder that works well for shareholders.
Now that you've reminded us how royalty companies make their money, can you circle back and give us a new view through that lens of the acquisition that you're announcing today with this press release? Why should, knowing that, how should we view this and see this as accretive to VOX's financial performance going forward? Yeah,
absolutely. And so breaking this down, so this is, in terms of gold equivalency basis, about 50 million ounces in the ground. Our royalty covers the entirety of the known resource to date. It's open at depth. And so Sibanye-Stillwater, $10 billion producer, NYSE listed, Johannesburg listed. They run some of the most successful PGM projects in both South Africa and Montana, and really one of the premier operators in the world that you can have operating a royalty-linked asset. And so this is in their 2 to 5 year plan. They've recommissioned studies to see how they can bring it back online. And so this is an asset that's going to continue to realize positive catalysts that continue to re-rate the value of this royalty. So it's great value for where we acquired it now, as Sibanye-Stillwater makes kind of further developments on this asset. That value is going to continue to re-rate to the benefit of our shareholders. And so when you're looking at this, Sibanye-Stillwater is going to have to invest if in today's terms they put around, I think it was 65 to 75 million back in 2001 when it was a previous operator building the declines, it actually produced this royalty is paid to the former owner of this royalty, which we acquired. But they're going to have to invest hundreds of millions of dollars to bring this back into production well. They're working on the studies. They will probably drill. So they'll be using a lot of capital and a lot of resources to bring this mine back online that should produce for generations when it does. We're not affected by that capital cost. So our interest is undiluted. That revenue, that top line interest will be undiluted as Sibanye continues to invest in this project and eventually brings this back online, what we think is a relatively near-term time horizon. So that's the benefit of owning VOX, is we have this monstrous exposure where we're getting a great value today and not exposed to that continuing and increasing capital that will be required to bring that back online.
Can you talk to us just at a moment about some of the internals of the acquisition itself, these royalty streams? You mentioned more than one project there, or more than one region there adjacent, I believe. Could you talk to us about why you see specific, why you think there's promise there, why it drew the interest of VOX?
Yeah, so, like we just spoke about, the fact that it was already producing back in 2008, 2009 with a basket of metals that were 1/7 as valuable as they are today, speaks to the tremendous upside and really our confidence that based on Sibanye-Stillwater disclosure that's out there in the public markets, that this is an asset on track to come back online in the relatively near future. And as you look at the world and as you start shaping your viewpoints on investing in mining companies or investing in royalty companies, the reality is what we're seeing across the board is cost inflation for build out of mining opportunities and the infrastructure costs and everything that goes into bringing a mine online. Pretty much all of the majors, as they start announcing what the capital costs are, they've gone up significantly. We're not exposed to that. So, I believe we're in an environment where metal prices are going to catch up. The cost inflation is going to remain probably for longer than anyone would want it to be, but metal prices are going to catch up, which is going to further incentivize investment into big projects and big opportunities like this. And it's relatively de-risked. Past producer, 50 million ounces in gold equivalent resource, 18 million of which are measured and indicated, another 18 million is inferred. And then there's huge, how do we get to 50 million? There's huge copper and nickel byproducts that were part of the producing metal commodity matrix when this was last in production. And Sibanye-Stillwater is making this big shift into the transition to clean energy metals. As you noted, the PGM complex of metals is very key to that development. And you overlay that with the copper and nickel, which, again, other key commodities in that effort. This is something it looks like they're going to be focusing on and expanding the opportunity for this asset to come back online. So it's for an abundance of reasons. It's amazing value. It's $1.5 million of stock up front. Also, we look at creating win-win situations. We start, as I mentioned, with 8,500 royalties that are held by third parties all around the globe. How do we narrow that down? We have to find good value, but sometimes to find good value and to convince someone to sell you an asset, they also have to feel like they're getting a win and earning a win on this as well. So they're taking $1.5 million of our stock up front, and they're locking up for 2 years. So they believe that they're de-risking their situation a little bit, but still increasing or at least allowing themselves to realize what they believe will be an increasing in value asset over the next few years. And they believe VOX will continue to re-rate as part of that. So it was really one of those win-win scenarios that we found a great seller that we could unlock some value for and create a lot of value for them and our stakeholders at the same time.
We have a question here from a viewer that I think is relevant to this particular announcement, and then you can broaden that out for VOX in general. Bradley Rutledge says, we normally hear all the upside and positives for investing into royalty and streaming companies. Would like to hear your opinion of the hurdles and potential downside risks. So in general, for investors looking at royalty companies, what would you say that people need to be aware of as potential hurdles or potential downside risks when investing in streaming companies, royalty companies?
And that was from Bradley?
Mm-hmm.
Well, Bradley, thanks for your question, and it's frankly a great question. The reality is the royalty industry is very crowded. The typical barriers to entry are almost kind of not existent in this industry. It really comes down to cost of capital, and at the end of the day, being able to source transactions. What you find in this industry is it's become very competitive. I think there's now 25 to 35 listed royalty companies that are all competing for airtime, all competing for investor dollars, and all competing for acquiring these types of assets. The reality is very few of them have demonstrated a track record of being able to find value for shareholders at a systematic level. You might get lucky once or twice, but typically what's happening is they're paying top dollar, they're outbidding all of the competition. We've seen consolidation happen in the space, but again, it's all at top dollar prices. So you can get into a company where, the simplest way I can boil it down, you're paying 1 times net asset value for an asset. Well, what does that mean? You're paying 100% of what you believe the net present value of that asset is going to be, which means there's no margin in it. The only way that margin is created in that sense is if metal prices go up or there's further discoveries that increase the total quantity of the mineable resource or the reserve.
Some upside expansion one way or the other. Okay.
Correct. But if you're paying 1 times, you need things to go well just to get money back for your shareholders. And that is one key, I would say, systemic issue right now that's plaguing the industry. Is there's so many royalty companies out there, and they're driving up valuations because they don't have a systematic approach like we do, and intellectual property, and 10 years operating the space, 40 plus years as a team, 1.5 billion worth of transactions that they've transacted on. They're just going out there and saying, well, royalties are a better model. I want to play in the sandbox too. And so if you're not really diligent on where you're putting your money into these companies, you could end up being very, kind of left holding the bag with a company that's overpaid for a lot of assets. And that's something that we watch very, very carefully to make sure that we're not doing that.
Another risk that some of our viewers have expressed concern about over the years is the jurisdictional risk in different national areas. And in fact, that kind of intersects or collides with some of the reasons for constraint in the platinum group metals supply chain, because there's a concentration of these production areas in the world, and there are some political tensions in some of those areas, South Africa being one of them. Fricandel Special says, how do you view the emerging nationalization in South America and other restrictions, and which are the safest areas in your understanding? So I guess looking at that, not just for South America they asked for, but South Africa, where you guys are targeting the strategic value of this asset that you've just acquired. How do you assess and factor into your valuation criteria jurisdictional risk?
Yeah, absolutely. And look, make no mistake about it. This asset, the fact that it's in South Africa, and South Africa is not a tier 1 mining jurisdiction. It's got, I would say, governmental and political issues that certainly create hurdles to new investment, and some challenges on the ground, and we'll be, very upfront about that. But the reality is there are some very, very significant streams and royalties in South Africa. You look at another peer in our space, Nomad Royalty Corp, just put, I think, between $50 and $100 million in a new stream and a new royalty there. Same with a company called Trident. They just acquired revenue interest coming out of South Africa, I believe. Also Triple Flag, who's a $1 billion plus player in the space. Has acquired recently a pretty big interest in South Africa. And I could go on and on. South Africa is a very known quantity as a mining jurisdiction. We look at it on a portfolio basis, and we look at it on a value basis. So absolutely that would factor in South Africa, say, versus Australia and Western Australia, which we believe is the best mining jurisdiction on the planet. How you're looking at your hurdle rates and your risk and return thresholds changes based on these jurisdictions. Ultimately, you want a basket of royalties that's in generally tier 1 jurisdictions, but you're supplementing and finding value in other areas at the right prices. And so I think we're doing that very, very well. But 70+% of our portfolio is in tier 1 jurisdictions, mostly Australia. We have the second largest holding of hard rock mining royalties in Australia after Franco-Nevada. The US and then Canada are also very significant for us. So this is probably, South Africa kind of ranks middle of the group in terms of sub-Saharan Africa. But it's a situation where you've got a great operator, very known quantity operating in South Africa, and the right basket of metals, I think, to be very successful, and the right kind of asset to be successful in that climate.
We've been talking about VOX itself and its portfolio of royalties as you look down at all this options for providing shareholder value. There's a different perspective here. This question comes looking up from VOX Royalties. I see newbie peoples ask, and this is from Emile in Quebec. He says, can you reassure me about the potential acquisition of VOX by a larger company? I see that as a risk for investors, as you would be selling at a low point in the commodity cycle. Investors might be stuck with shares of a large cap company that has less potential gains than VOX itself. So as attractive as VOX is to retail investors, it may also be attractive to companies that would like to acquire VOX. So how should retail investors see VOX as an investment, given that risk that it might be gobbled up by a larger company?
That's a very fair question, and I think a cerebral question. We are seeing consolidation in the space. Obviously, if you're following the sector closely, and for those that aren't, Elemental Royalty Corp, which is, I would say, kind of more or less a peer to VOX, has had a hostile acquisition offer from Gold Royalty Corp that they're, I guess, in the process of fighting off. So, I look at our company as a very attractive M&A target. I think that's a good thing. It means that we're creating the right kind of value. That being said, management, founding investors, board, indirectly, I think we could fend off something that was more hostile in nature. But ultimately, look, we're serving our shareholders. I think we have a long way to go in terms of creating value for our stakeholders. We're nowhere near, I think, that point of diminishing marginal returns, if you will. We started the year kind of white hot in terms of what we've delivered. This is a fantastic opportunity. We've been working on this for months and months and months. And finally, we got to a point where diligence and everything that we needed to happen was in place for us to be able to execute and announce. But I also know what's coming behind this in the pipeline, and I'm really excited about that. So, look, we are looking at this. Management owns 16%. We are trying every single day to maximize long-term shareholder value and fighting to do that the best that we can. So it's a fair question. I think we're well positioned to fend off anything that would be hostile, that's not value maximizing for shareholders. But that is, that's our main intent, is to create long-term value and maximize that for our shareholders. And ultimately, look, if there was an acquisition that we think did that, we would step away for the benefit of our shareholders if that's what was required.
Kyle, before we let you go, are there any other thoughts that you want to make sure that people have clear in their mind about the meaning of this latest announcement and how it fits into the overall trajectory that you see for VOX?
Yeah, look, I think when you compare us to some of our peers, and I won't get into naming names out there, but this really kind of moves us into a completely new class in terms of valuation versus a lot of the comps that are out there. We're growing faster from a revenue perspective. We're growing faster in terms of gold equivalent ounces under royalty coverage by a very meaningful magnitude over most of our peers. And so I think we've really demonstrated to the street and to our investors that we are able to systematically, and this goes to one of the risks, systematically able to find value in a sector that you and I, Dunnigan, probably believe the tailwinds are going to be there in terms of metal prices. The tailwinds are shaping up to be there in the industry overall, with many investors looking to get exposure to metals. It's one of the, as they rank institutional investor interest for the next year, it's one of the top, call it, sectors that investors are looking to get exposure to. So I think we're right place, right time from that kind of perspective on things. But really, we've been able to find and create value time and time again because of our systematic competitive advantages. So for investors looking for good value and good growth and great upside, I think VOX presents a really unique opportunity still for investors to get in at the early days.
It's been exciting, actually, to hear these successive announcements quarter by quarter by quarter since we've started talking about VOX and seen that growth playing out and coming true. So we're looking forward to more from that. Thanks for this latest update from the newly released press release that just came out this morning. And people, check that out. There'll be a link to that in the description of this video so you can take a closer look. And as always, Kyle, on behalf of all our viewers here on Liberty and Finance, just thanks for joining us.
Thanks, Dunnigan. Always a pleasure to be with you, and thanks everyone for tuning in.